So let's go ahead and look at the portfolio. Let's talk about these stocks. Let's talk about some changes that could be coming, things like that. Okay. So right up the top here, right? Meta's the biggest big dog position of them all, right? Meta's the big dog, $1 million plus position in here. I don't love how heavy of a weight it is. I'll just be honest with you guys. I mean, a 32% weight is not ideal. It's not ideal at all. But with that being said, if you think about Meta, they're diversified across several different platforms. So it's not like, I'd feel differently about Meta if it was only Facebook, or if it was only Instagram, or if it was only WhatsApp, or if it was only the VR opportunity or the AI opportunity, right? Meta's a massive company with huge different properties that remain key in people's lives. So it makes me feel comfortable. Additionally, the income statement's top tier at Meta. Additionally, the balance sheet's top tier at Meta, right? So that makes me feel at least pretty comfortable. If I'm going to have a 32% weighting of a position, a portfolio, at least it's that. The other thing that keep in mind here is the gains on Meta are $818,000. So it's not like I put in just some crazy amount of money to Meta. It was just that it appreciated a great deal, right? Additionally, let me show you something else in regards to Meta. So when you look at Meta's valuation here on 1000xstocks.com, right? The forward P's in the 20s, and Meta comes in and beats their numbers all the time. So the reality forward P is probably 20 or 21 right now, which for a company that has double-digit top-line, bottom-line growth, that's not high for Meta, right? That's not high at all. You look at the charts feature here on Meta. I mean, does it get better than that? Does it get better than that? Phenomenal. Great margins at this company. Net margins recently in the last 3 quarters, 38%, 43%. 39%. Those are amazing net margins. We could be talking about Meta's about to go 40% plus net margins and be there for a long, long time to go in the future, right? The earnings per share just continues to climb. The company's been spending fortunes of money in regards to investing into the business for this next huge AI opportunity, which, my best guess is it's a better investment than buying back shares of the stock right now. But at some point in time, like Meta, it's going to make sense for them to do massive share buybacks. I don't know when that is. Maybe it's a couple of years from now, maybe it's 5 years from now, maybe it's 10 years from now. But at some point in time, it'll make sense for them to start just deploying tons of their capital back into buying back stock. But, everything across the board is phenomenal in regards to Meta. If you run projections on the stock, even with very, very modest numbers on Meta, like you don't have to go big here. And this is good for everybody to know, like Meta's still a buy. Like you see all the gains I have in Meta stock. It's phenomenal, right? $818,000. The bottom line is Meta's still a buy today. I can show you. So, what's a assumption that we could probably run with revenue growth for the next few years? 15%, fairly realistic, right? And you could say maybe it'll be a little worse than that, maybe be a little better than that. 20% bottom line growth, if they're doing 15%, is pretty realistic here, right? So you run 20s across the board, and then we go ahead and we say a 25 to a 30 P is pretty fair for Meta overall, given, you could say that's undervalued, honestly, given the growth rates of this company. So we'll run 30s here, and you'll get to see exactly why this stock is still, look at the returns the stock's going to likely provide over the next few years, assuming these cases are right. And once again, you could take it down a bit. If you want to run this as a bull case and then run a base case on 1000X and do those numbers at like a 13% and do a bear case at like 8% or 10% revenue growth, you can do that. But if you just run 15% revenue growth, once again, not a crazy number. Remember, on a constant currency basis, Meta in their last quarter just grew 19%. So we're talking about a big deceleration here, even with this assumption. That puts the stock, in 2027, 2 years from now, at $1,000 plus pretty much, right? Gives you a great compounding annual growth rate. If you look at 2029, it puts the stock somewhere between about $1,400 and, we can call it about $1,700. So the moral of the story is in regards to Meta, like I don't love that it's a huge position in the public count, but at the end of the day, the stock's still a buy. It's still one of this, if you're going to say of the individual stocks, you got to say they're probably one of the 20 or 30 safest companies to invest in because their business is so diversified and their financials so good, right? AMD's climbed rapidly to a huge position on public count, 9% weighting. And listen, here's the difference between AMD, Meta, Palantir, Amazon, and these other stocks, right? AMD, I put a crazy amount of money into that one, right? And it hasn't run yet. If and when AMD does go on its run, which my personal belief is AMD's already started the run. The run actually started in April, and I think is going to go on a multi-year run. That does not mean every single day is going to be up for AMD, or every single week, or every single month. But the overall trend for AMD stock, in my opinion, for the next several years is going to be up and to the right, and up and to the right. So AMD, like, how big do I think this position is going to get in the public account? I think it's going to become massive. I think this is going to become like, I wouldn't be surprised if AMD a few years from now is, at least a 15% weighting in the portfolio, if not over 20% of the portfolio. Based upon the run, I believe AMD is going to go on, because if you want to know, like, what do I see AMD stock at 3 years from now? The answer is I see AMD probably being $300 plus a share if we're, fast forward 3 years from now. So, and you say, okay, maybe I'm wrong. Maybe it's 200. It's a lot higher than it is today, right? And so could AMD ultimately become a position that's an $800,000, $700,000, $900,000 position in this portfolio? It could over this next few years. If they execute the way I think they're going to execute, and Lisa Su pulls this thing off the way I think she's going to, and the positioning in the company, I think there's a long runway of growth in regards to AMD. And AMD's not at a rich valuation, man. It's not. And you can run projections. Run your projections on AMD, and you'll see, like, this stock is valued pretty good here. 29 forward P, given the growth rates AMD should experience. Like, we're going to be talking about a company that's probably going to be growing, my guess is 30% revenues per year for the next many years, right? You're going to say low end 20%. So AMD looking phenomenal. Palantir, listen, man. Listen, Palantir, obviously the valuation's ridiculous. We all know that, right? We all know that. With that being said, let's just go away from the valuation discussion for a minute. A forward P of 200 plus, right? Let's just separate that. Let's just talk about Palantir straight up. Phenomenal income statement. Their margins are skyrocketing. Their revenue's skyrocketing. Their profits are skyrocketing. Not like they're going up. Not like, oh, they have good growth. No. They're skyrocketing. They're like on a whole different stratosphere. Like, you can't even really compare them versus any other public companies because they're so ridiculous in terms of their growth rates, right? Top tier balance sheet at that company. Given the size of the company, the balance sheet's insane. They're going to throw off ridiculous sums of cash over this next 5 to 10 years, which means they can use that cash to buy out other companies, or if they just want to build out new services and products and whatnot, they can do that. If they want to do insane share buybacks over this next 5 to 10 years, they can do that. There's so much optionality with the business. And the business is so well positioned for this next decade. So if we could just put valuation aside, and if you just looked at everything else with Palantir, oh, by the way, and they got a CEO that's as focused can be over there with Alex Karp, right? You will see this is one of the best companies in the world right now. One of the best in the world, the way they're executing. But the valuation is insane. So that's the tough part with Palantir. And that's why the only thing somebody could poke at with Palantir at this point in time is the valuation. So I can understand people looking at Palantir and being like, man, that's a great business. Phenomenal. Like, I wish I owned stock, but I'm not going to buy it because of valuation. Respect. I could also understand people that do own the stock right now saying, man, I love the way they're executing. I love the way they run the business, but you know what? I'm going to cash some shares because the valuation is just so dang insane that they've priced in so much growth in future years. That's fair as well, right? But that's the only thing you can say about Palantir is valuation. So, at some point in time, Palantir will end up trading at a more fair valuation, but you don't know when that is. Like, maybe that's years from now. That could be years from now, right? Amazon's next one up here. Listen, if you want to know, is Amazon stock a buy right now? Listen, abso-dang-lutely. Amazon's a buy yesterday. It's a buy tomorrow. It's a buy today. It was a buy 6 months ago. It's a buy 6 years from now. Like, Amazon's a buy, okay? If you run projections on Amazings on here, you can see this company, at the end of the day, it's a moneymaker. So in terms of PE ratio for Amazon, this is a stock that usually, you got to figure you're going to pay at least a 30 to a 40 P ratio for the stock. Sometimes it can push 50 plus. I've seen it actually many times it pushes 50 plus. And when it comes to revenue growth for Amazon, I think around a 12% number is very fair to assume Amazon will be growing top line. Bottom line, I would push them way up to probably I would push them to 20 or 22% net income growth, because they're going to get a lot of bottom line leverage over the coming years, right? Which puts the stock come 2029 at somewhere between about $400 and we call it about a $540, because you have a compounding annual growth rate on the low end of about 19% and on the high end of about 28%, right? So at the end of the day, Amazon is a amazing buy, right?
Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com.
All right, next up here, Morgan Stanley's Mike Wilson, and then we'll get into some other important subjects and some stocks and some opportunities and some millionaire makers and all that good stuff.
Thanks, Ro, really.
If that was a dip, right?
If that was a dip. Define a dip here. What kind of dip would you buy?
I mean, 1% sell-off isn't really a dip worth buying. I would say 5% is a dip, 10% is a correction, 20% is a bear market. That's kind of the way we, talk about it. So we do think a 5% correction or dip is possible based on the move in rates. That's kind of been our view. And quite frankly, we're still stuck in that range that we identified earlier this year, 5,500 to 6,100. So we got closer to the upper end of the range. Now we're going to get a dip. I'd be surprised if we take out the 5,500 unless something really, deteriorates again on the tariff side, okay? And we go through that in our mid-year update. Like, a lot of things now have turned the corner from a rate of change standpoint. That's going to make it hard to return to a sub 5,500 price in our view.
Is the tariff the only left tail risk? Because it seems that a blown out deficit with this new tax, this one big beautiful bill, is concerning markets, at least when you look.
One big beautiful bill. By the way, there's good deals all over this market, right? I'll be doing my buys tomorrow, right? But I'll show you good deals all over this market, okay? We can pull up some right here, baby. There's good deals all over this market. And I'm not just talking about small caps or some hidden stocks. There's ones right in front of your face. Look at Meta. You're going to tell me Meta at, a little over a 24 P is not a great deal today? Of course it's a great deal. It's a huge money maker, right? It's a double-digit top-line, bottom-line grower. Like, come on, man. Look at Google McDougal. Google McDougal's at a 17 forward PE with double-digit top-line, bottom-line. Adobe, this is a SaaS business model at the end of the day. This is just like recurring money coming through, right? Adobe at a 20 forward PE with double-digit top-line, bottom-line growth. Come on, man. Like, these stocks there's just easy buys all over this market. And I showed you AMD before, right? AMD, think about the type of growth rates AMD is going to be putting forward starting in the back half of this year and then as we go into 26, 27. At a forward P that's still in the 20s? Come on, man. There's a lot of steal deals in this market. I'll be doing buying tomorrow. I'm looking forward to it. I buy every single Friday. And so you don't need to go out to, and then there's obviously and we'll talk about more of these type of stocks in a moment, but then you got, these sorts of opportunities that are turnaround plays that I think have huge upside over the next 2 or 3 years, like Nike, EL, stocks like that, right? Even though this market I know has come back strong, we're still significantly off of where we were, a few months ago, and there's still deals all over this market.
Rates, right?
Well, that's right, and that's exactly why we can't break through to the upside, because there's two things going on the rate side. Number one, you have excess supply. The deficit now is a problem again, potentially for the bond market, but also the Fed's on hold, right? The Fed has been a bit, overly focused on inflation, and so you don't have any rate cuts in the near term, and you now have this supply risk. And the fiscal deficit blowing out. So that took rates back about 4.5%. That's always been our level where multiples come in. That's a 5% move historically. That's not a 10%, 20% move in isolation. Now, if that leads to something else where we have another growth scare, for example, because rates are higher and all of a sudden recession risk comes back on the table, that's a whole different ball game. That's not our view.
Okay, so for long end rates, at the very least, at what point do they become a bigger problem for the equity market?
Yeah, I think 5% is where it becomes a real headwind for
10-year.
Yeah, for consumer, like everything's priced off the 10-year, right? So then all of a sudden you're looking at, oh my goodness, we have now recession risk potentially is back on the table. But in that instance, just think about it, the Fed will act then, right? I mean, so we have this sort of, it's going to be back and forth like this for the next 3 to 6 months. The way you got to think about the first half of the year, most people came in very bullish. We came in more, not that bullish about the first half because of the sequencing of policy. But that policy now has flipped to a more pro-growth sort of stretch. And that's what the market's going to start to think about. That's why it's going to be really hard to take out 5,500.
That is, by the way, my question of the day, Shanali. Like, at what level do yields really start to put pressure on stocks? And you're saying 5%. Goldman Sachs was out this morning saying 5% as well. Chris Waller was speaking, I think he was on Fox this morning. Are you looking at me funny?
Yeah, I forget exactly where he was as well. I just saw the headline.
Okay, so, but he was saying, like, if tariffs stay at 10%, the Fed is good to go in terms of cuts in the second half of this year. What are you expecting from the Fed in terms of stimulus? Because that is important to the stock market at the end of the day.
I think it's critical. It's another factor, though, the rate of change is going to turn more positive. Don't forget that, the big rally last fall was driven by, a lot of it was driven by Fed cutting into an economy that was fine. And then they stopped in December. That was really the beginning of the correction that we saw, not tariffs, okay? So, yeah, I think that the Fed will be either communicating that they're turning more dovish or they'll actually be cutting. Our official House view is no cuts this year, but then they have 7 cuts for next year with no recession.
Yeah.
So that's pretty bullish. So, I mean, if we get 7 cuts with no recession next year, stocks are not going down.
7 cuts with no recession. Yeah, well, fair play. Okay, so looking at this one, Enphase here, right? I said, put this out to the private stock group. I said, I'm so happy I stayed away from this one. It had a ton of hype in 2022. So many people tried to get me to buy it. Yes, there was especially a lot of retail investors were involved in this one, right? The stock was doing very well in 2022, while it seemed like everything else was crashing. Yeah, if you think about 2022, I mean, stocks like Shopify fell 70, 80%. Netflix fell 70-something%, right? Netflix got all the way down to $165 a share. Meta obviously fell to $88. I mean, it was devastation all over the place when it came to tech stocks, right? Nvidia stock is up like 1,000+% since that particular low in 2022. To me, it felt like a company that was just benefiting from a short-term solar boom, and the bust cycle would come. That bust cycle has come. Stock is down 80% from those 2022 prices. Yeah, you look at Enphase stock, it was well over $300 a share back in that kind of October, November time frame there. And, since then, obviously, it's devastated. And it's gone down so much now that it's negative on a 5-year basis. So even prior to the whole huge move, you've lost over 15% if you've been investing in the stock the past 5 years. And that never mind if you were obviously buying up here at $200, $300+ a share, right? So, sometimes you just got to stay with your conviction, even in a tougher market. If you see, if people are making a bunch of money from stock, that's good. But at the end of the day, when I looked in this company, it seemed like a company that was just benefiting from a lot of short-term stuff that was going through. A lot of excitement around solar. Solar business was kind of flying high. Really in Rona time, then into 2021, even into 2022, you had all the Biden stuff, the Inflation Reduction Act, and all that excitement that was going on there. But it seemed like as rates went up higher, because a lot of people would take out debt to finance this solar, right? It seemed like it was just not going to end up being the play, right? And people still kind of piled into it. And I'm like, geez, this is risky, man. I've spent so much time, obviously I've lived in Vegas the last 10 years, and so I know these solar companies very well, as far as at least all the solar sellers, and it was a hot business, man. It was a hot business to be in. It's as cold can get now. It's as cold as cold can be when it comes to kind of the solar business now. It's a tough sell to people to tell them you're going to sell them this big thing. And people are like, I don't know about this, and trying to finance the costs and things like that. And plus, there's just been there's been a lot of momentum lost in like clean energy and the excitement there, EVs, solar, all this stuff has lost a lot of power, no pun intended, over the last number of years. Like there's not even remotely close to as much positive sentiment around electric vehicles now. Solar, we're going to save the planet, save the globe. And I think a lot of that's driven by obviously the top of when you think about who's the person that was behind a lot of this is Elon Musk, right? And with Elon Musk kind of change over the past number of years over to the right, a lot of people kind of said, wait, do we even believe in this like EV stuff? Do we even believe in, climate change? Like now there's a lot of questions. So it just lost a lot of momentum, man. And so now it's gone through a bust cycle. With that being said, probably a lot's de-risked in the stock now, but still, just not a company I'm looking to be in. It's just not my cup of tea, just to be quite frank with you. Now, we got some stocks that's making people fortunes out there, right? ELF is up 67% since April 17th. AMD is up 42% since April 9th. Palantir is up 55% since April 9th. Tesla's up 54% since April 24th. SoFi since April 9th is up 39%. And the thing that's important, by the way, if you ever want to follow me on X, I always have that linked in the description area down there. And then the pinned comment down there today I'll have is my private stock group. If you want looking to apply, join our private stock group, private wealth group, get access to my private Discord chat, all the course curriculums, all that good stuff, 1000xstocks.com. You can certainly apply. That's with the pinned comment. But the description area, I always have my X page linked. And the moral of the story is you got to act fast. When you're in those major corrections and crashes, you got to act fast. You play around, you wait, you think, you try to play it cute, like, it's going to go down a little bit more, I'll buy next week, blah, blah, blah. You could completely miss it. And the scariest part is, look at the moves these stocks have made. The market's not even at all-time highs. Now, let's just fast forward. Let's assume this is 2018, and we're going to hit new all-time highs in June or July, right? How much do you think these stocks are going to be up by that time? At a market at new all-time highs, with investor sentiment, let's say, gets a lot better. Consumer sentiment, my gosh, then we're going to be talking about these stocks are up 70, 80, 90, maybe 100% from where they were in April at the lows. So you got to act fast when you're in those major corrections and those crashes because, you don't get a lot of time. You don't get a lot of time, man. Especially nowadays. The market moves so fast. The market is so drama now. The market gets so freaked out so quickly and then recovers so quickly. It used to take a year, 2 years for the market to go down, right? And just kind of it would slowly go down lower and lower and lower. Now, it seems like it just crashes and then comes straight back, right? We're in a way, the news cycle moves so much faster. The way things play out moves so much faster. Everything is so much faster nowadays. So instead of a gradual move down, now it's boom, you're down. All of a sudden, look at the NASDAQ. The NASDAQ from that February 19th high, right, to where it was at the beginning of April, it fell 25%. 25% in a major index. And the NASDAQ is not some kid index anymore. This is not, 2000. That's the big dog index now. That's probably the index that honestly matters the most of any of the indexes, even more than the S&P 500 nowadays, right? And it moved down 25% that fast. The S&P lost 20% without any concrete hard data, just off of sentiment about, what's going to happen with Trump tariffs? We're scared. 20% down. And then you get these rapid recoveries. And you go look at Rona. That was another great example. S&P 500 went down almost 35% in a matter of a few weeks, right? And then started to come back very strong. The comebacks take more time than the downfalls because people were humans. And so humans get scared faster than they get excited faster. And so, the downfalls are faster than the up cycles are fast, right? But the up cycles are much more powerful. They're like a tsunami, right? Versus the crashes are like one big wave comes in. So they're different, right? But it happens quick, man. So you can't get cute around pricing. Now, I talked about Palantir. I said, what's your end of year price target for Palantir? At that time it was 125. I think it ended at 122, right? It said under 100, 140 or over 140. So the stock could go over 140 and end this year over 140 if the growth rates just keep accelerating. They got to keep accelerating. Not like they got to keep growing strong. You got to accelerate the growth. So next quarter has to be well over 40% growth and then 45% growth and then pushing up to 50% growth. If they could do that, then you could be talking about stock that will end this year over 140. On the flip side, if we start seeing a deceleration in the growth rate next quarter or the quarter after, then I think the stock will get hit pretty heavily and it could go down to 100 or even end the year below 100. So it really comes down to what is that revenue growth doing? If you keep accelerating, Stock's got more upside. I know the valuation's ridiculous on Palantir, right? But the valuation for Palantir, it doesn't matter right now. All that matters is the growth rate accelerating or decelerating. And until that growth rate starts to decelerate, right? So instead of growing 40%, they grow like 37%. Until that happens, people are going to be happy buyers of the stock. The moment you start to see that growth decelerate, it's going to be a tough time. It's going to be a tough time for Palantir for a while, especially if then you're talking about the growth keeps decelerating. But for now, it's just a lot of excitement. You got new deals. Yesterday, if I recall, they just got a new contract worth several $100 million at Palantir. So right now, it's party on, man. It's just been party. At some point, the party's going to end, right? And it's going to be an ugly ending when it ends. It's going to be an end in a big fight. But for now, it's party. Other than that, there's still some great opportunities out there. I think Nike remains a great opportunity. EL remains a great opportunity as far as some turnaround plays there. So you definitely got some of those opportunities. Amazon's always a buy. We know that, right? We spoke about Google, McDougal. We spoke about Meta, Adobe, some of those sorts of stocks, okay?